What's up, guys? It's June 24th, Tuesday, and today was probably not one of my days. I lost about $717.50, and I got only about 4.5 hours sleep thanks to the New York City heat waves. So, overall, I felt a little off, but that's trading. Some days you win, some days you learn. So, let's break down what happened. One of the other reasons that I didn't want it to trade this morning when I woke up was because I saw how scammy the market was, and this is from experience. You know that this huge V-shaped reversal yesterday on the announcement of ceasefire. Well, not even the ceasefire was toward the end of the day, but this was after Iran attacked, and they were like, "Oh, thank God they attacked." Now that they attacked, we can have a ceasefire. And then the market just ran up, not being 100% sure of the information, but clearly somebody knew, right? Then they were like sure enough to change direction that quick. So then overnight, the market also gapped up heavily as well. We went from 60.62 to as high as 60.6140s. So let me translate that into SPY to show you how big that move that was, right? So we end up closing around maybe like 600. We end up opening at 60, like around 604, 605 ish, which is pretty gapped up, pretty big gapped up move. Overnight. And what that means is that a lot of options sellers or options traders got destroyed. They got wrecked in that situation. And what that means on the other side of it is that market makers are heavily manipulating the market in a sense, right? Most likely. And they're going to drive the market to an unreasonable position and they're going to be in control. And that's kind of what you see today as well. So we had 9:30 a.m. We had 9:40 a.m. We had our first market structure signal, where the market structure flipped bullish, right? And after the market structure flipped really bullish, they decided to like try to sell off a little bit to kind of trigger people to start shorting. Because I mean, look at this big gap up, right? Everybody, all they want to do is wait for a short, and they want to do is short. So after they did that, after people are probably jumping into the short at 6100, they pushed back up over here, and this is like a huge push, 15 push back up, and this push back up is guaranteed to squeeze out anybody that is essentially holding short position. It's going to hit their stop loss. So after they did that, they had another violent move down, um, back test a little bit here. At this point, we're back testing the resistance now because we're back testing on these smaller moving averages here. And that's a bearish signal when it back tests the resistance. So when it loses the resistance and then it's coming back to test the resistance, now the resistance is a wall, right? All these moving averages are a wall that needs to break through. And obviously it doesn't break through, it fails it and it goes down a little bit further, only to be violently moved back up and breaking over the wall and now using that wall as support, as you can see here. So you can see this big yellow line. Consider this big yellow line somewhat of a wall, right? We lost it. Now we come back here, bounces off it downwards, and then we break over it here. And then now we're using it as support. And now we're continuing to move up. See this? Move up, move up, move up, move up. And then we break it again, getting all the bears really bearish and excited here, only to move up and just continue bouncing, right? To higher highs throughout the whole day. and and they just kept the market up really well today, to the point where at the end of the day, 350, when pretty much all the option seller has already exited. Because if you're holding 0 day expirations, most of your exchanges will force you to exit around 330. So they'll force you to exit here, and then the people that are holding it will have it at the end, and they'll make the difference of the money here. So it's a pretty scammy market in a way, in a sense, if you look at it. Most of the signals didn't do that well. We had the bullish structure signal that most that you could have made was 5 points there, at the sacrifice of 15 points on the downside. And then 942, we had an X3 buy signal, which usually works out pretty good, but this also failed. And this is also a good way of knowing that, hey, today is not the day. And some days you just got to walk away and live to fight another day. Unfortunately, I did not as well. I continued to trade the market and I got wrecked a little bit. And then we had 11 a.m. We had another uh, bullish structure flip over here, and that worked out pretty good. That was a 20-point move. So if you lost like 15 points on the previous signal, you could have made 20 point back there. And then 11:58, we had another sell signal which failed. Was on NQ, and that was around here. We thought market was going to sell off here, but clearly it didn't break under the moving average, and it just continues grinding up higher. Now, where I lost most of the money was around the 6140 range. So I thought 6140 to 6145 was a pretty strong resistance. That was effectively a huge move from here, 60s, 70s. That was about 50% plus of the range that it was supposed to have moved, and we had hit that range. So I shorted around 6140, I shorted around 6145. I had an opportunity to take profit over here. Unfortunately, I did have a take profit at 61, like 39.5 ish. And it just didn't hit. I missed it by 25 cents, and that really destroyed me. And then it eventually continued to grind up higher to 61.55, which was at the top of my stop loss. So it hit 61.55.25. My stop loss was at 61.55, which was around 15 points for me. And it hit that, and then that ended up being the peak, and then we went all the way downwards. And that ended up getting me really good. So that was somewhat of the trade highlights here. The biggest takeaway is that there will be days when, the signals are wrong, and that's okay. The key is to just trust the process that you have and always use your stop loss to protect your capital. So as long as you have discipline, that will beat emotions every time. Uh, so I hope that gives you guys a better idea of it. I think I ranted a little bit longer than I needed to, but it kind of just wanted to explain the market condition a little bit more. So looking ahead, I would watch this 6130 levels over here as a critical support. So if we break under this level, we could potentially retrace back to. So if we lose that 6130 level here, you know, we could come back to 6100s. We can come back to 6058s or 6060s. But as long as we're above that 6130 level, we can continue to be bullish. And yesterday we had a level 2. We had this level over here to watch, right? So just continue to use that as your way to flip bearish or bullish. As long as we're above those levels, try to maintain as bullish as possible. And if you're new here, hit subscribe for the daily straightforward trade journal and market insights. Like this video if you find it helpful, and leave your questions and thoughts in the comments. Thanks for watching, and I'll see you guys tomorrow.